The S&P 500 just closed higher by 0.7%. Stocks rallied to record highs after July's producer price index came in flat, far below the 0.2% gain analysts had expected, pushing the implied probability of a September Fed rate hike down from roughly 55% to under 35%. The soft wholesale inflation print reassured investors that price pressures continue to ease. NVIDIA moved, communication led all sectors, and the VIX held steady. Welcome to Invest from Zero, your daily U.S. market wrap. I'm here every single trading day to break down what happened, why it matters, and what you should be watching next. It's Thursday, August 13th, and we have a packed show today. Here's what's coming up. We'll start with a deep dive into the S&P 500, then move to the NASDAQ and the Dow. After that, we'll walk through all 11 sectors one by one, so you can see exactly where the money is flowing. Then we'll spotlight the biggest individual stock movers in the mega-cap space, both gainers and losers, with our stock of the day getting a full 30-day chart review. We'll check in on the macro dashboard. That means VIX, Treasury yields, gold, and oil. And we'll close with 3 specific things to watch before tomorrow's opening bell. If you're new here, this is the show that covers the U.S. stock market every single trading day. No fluff, no hype, just data, analysis, and context. Hit subscribe so you don't miss an episode. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,798.99. That's higher by 0.65%, or roughly 50 points on the day. Yesterday's close was 7,748.50, so we're looking at a solid gain. For the week so far, the S&P is up about 0.5%. That weekly momentum is encouraging for bulls. When you see green day after green day, it builds confidence. Now here's the context you need. The S&P 500 is the single most important number on Wall Street. It represents 500 of the largest U.S. companies and roughly 80% of total U.S. stock market value. When this number moves, it affects retirement accounts, pension funds, and investment portfolios around the world. To put today's 50-point move in perspective, the S&P 500 averages about a 20 to 30-point daily move in comm markets. Today was a day where broad participation pushed the index higher. Breadth was solid. Now let's move to the other 2 major indices. The NASDAQ Composite, which is heavily weighted toward technology and growth stocks, gained 0.81% today, closing at 26,803. Growth names showed resilience. The NASDAQ came in ahead of the S&P 500 today, and that relationship matters. When the NASDAQ leads, it usually means risk appetite is strong and investors are favoring growth. When it lags, it could be a warning sign that the rally is narrowing. Today, the NASDAQ led, which is exactly what bulls want to see. The NASDAQ has been one of the best performing indices this year, and today's move continues that trend. Moving to the Dow Jones Industrial Average, it finished higher by 0.13% at 53,840. The Dow underperformed the S&P today. Remember, the Dow only tracks 30 blue-chip stocks, and it's price-weighted, not market cap-weighted. That means a high-priced stock like Goldman Sachs or United Health can move the Dow more than a lower-priced stock, regardless of company size. Blue chips were mostly flat. The key takeaway from the indices: all 3 are moving in the same direction, which shows broad conviction in the market. Now, let's get into the sector breakdown. Communication services was lifted by Netflix, surging over 5% on the Ackman disclosure, and Meta gaining nearly 3%, while materials lagged as falling commodity prices and a broad rotation into growth names weighed on the sector. This is one of the most important parts of the show because it tells you exactly where the money is flowing. Today, 8 of 11 sectors finished in the green and 3 in the red. That is strong breadth. When most sectors are green, it means the rally is broad-based, not concentrated. Leading all 11 sectors, communication up 2.1%. In second place, real estate at plus 1.42%. Third, consumer staples at plus 1.08%. These top three sectors are where institutional money was flowing today. The middle of the pack, technology plus 1.01%, financials plus 0.59%, consumer disc plus 0.48%, and utilities at plus 0.46%. Now the laggards. Energy came in at plus 0.05%. Healthcare at minus 0.04%. Industrials at minus 0.05%. And bringing up the rear, materials finishing down 0.5%. The spread between the best and worst sector today is 2.6 percentage points. That is a wide spread, which tells you there is strong rotation happening under the surface. Growth sectors are leading, which is a classic risk-on signal. Money is flowing into higher beta names. I always say, follow the sectors. They tell you the story before the headline does. Now let's look at today's biggest movers in the mega-cap space. Starting with the number one gainer. Netflix, ticker Netflix, absolutely surged today. Up 5.43%, closing at $78.24. For mega-cap stock, a 5.4% move in a single day is significant. We're talking about billions of dollars in market cap change in just a few hours of trading. Bill Ackman's Pershing Square Capital Management disclosed it had purchased 3.15 million Netflix shares, calling the company the winner of the streaming wars and projecting sustained double-digit revenue growth with expanding margins. The disclosure came in Pershing Square's second quarter shareholder letter released on August 13th. The volume will tell you a lot. If this move came on heavy volume, that means big players are behind it, and follow-through is more likely. If it was on lighter volume, be more cautious. If you own Netflix, congratulations on a great day. If you don't, the question is whether this move has more room to run or if it's already priced in. As a general rule, chasing a stock after a big up day is risky. But if the fundamentals support it, pullbacks can be opportunities. Rounding out the top five gainers. Number 2, Adobe, up 4.5%, closing at $270.49. Number 3, Salesforce, up 4.2%, closing at $201.37. Number 4, Tesla, up 3.8%, closing at $339.96. Number 5, Intel, up 3.6%, closing at $104.56. All solid moves in the green. Notice something here. These winners are spread across different sectors, which is a healthy sign of broad-based strength. Now, let's flip to the other side. The biggest loser today, United Health, ticker UNH, dropping 1.61% to $399.06. A decline like this in a major name always raises the question, is this a buying opportunity or the start of something worse? Here's how I think about it. Context matters. One bad day does not make a trend. What you want to check is, has anything changed fundamentally? If the business is the same as yesterday, a down day might be noise. But if you see follow-through selling tomorrow, especially on increasing volume, that's when you should start paying closer attention. The rest of today's biggest decliners. Bank of America dropped 1.1% to $64.09. Eli Lilly dropped 0.9% to $1,209. Amazon dropped 0.8% to $265.13. Exxon dropped 0.7% to $158.61. The average decline among our bottom five is 1%. That is a relatively mild decline. No panic selling here. Selling pressure was concentrated in a few names rather than being broad-based, which is actually a healthier sign for the overall market. As I always say, a down day is not a disaster. It's part of the natural rhythm of markets. Every stock in history, even the best performers over the long run, has had days like this. The key is understanding whether anything has fundamentally changed and whether the thesis for these companies still holds. Time for our Stock of the Day segment. Today, That honor goes to Netflix, ticker Netflix. Let's put this stock under the microscope. Netflix surged 5.4% today, closing at $78.24. Now let's zoom out and look at the bigger picture. Over the last 30 trading days, the stock has ranged from a low of $67.60 all the way up to a high of $78.24. That's a 16% trading range in just 1 month, which tells you this stock has been relatively well behaved. Not too much drama in either direction. At today's close, the stock sits 16% above its 30-day low. Right now, the stock is trading very close to its 30-day high. That means momentum is strong, but also that resistance could appear at this level. Watch for a breakout or rejection. This was the single biggest mover in our entire mega-cap watch list today. I chose it as stock of the day because when a name this size makes a move this big, it tells you something about the overall market sentiment and what type of stocks investors are favoring. If you're a long-term investor, days like this are noise. What matters is the quarterly and yearly trend. If you're a short-term trader, this kind of volatility creates opportunity. But as always, this is not a buy or sell recommendation. It's just data and context. Do your own research or talk to a licensed financial advisor before making any investment decisions. Now let's pull up the macro dashboard. Oil fell nearly 3% after both OPEC and the International Energy Agency lowered their 2026 global demand forecasts, compounded by a report showing a 17.4 million barrel build in U.S. crude inventories last week. Gold slipped as the soft inflation data sparked a risk-on rotation into equities, and the 10-year Treasury yield drifted lower after the cooler-than-expected PPI print reduced near-term rate hike fears. This is where we check the pulse of the broader financial system. First up, the VIX. Wall Street's fear gauge closed at 14.6, rising 0.6% today. That puts the VIX below 15, which signals extreme complacency. For context, the VIX measures expected volatility over the next 30 days using options prices. When the VIX is this low, markets tend to drift higher, but be aware, complacency can end suddenly. The biggest sell-offs often start from low VIX levels. Next, the bond market. The 10-year Treasury yield fell to 4.64%. That's above 4.5%, putting significant pressure on growth and tech stocks. The bond market is often called the smart money because it tends to price in economic changes before stocks do. When yields move, the stock market listens. Gold fell 0.8% today, trading at $4,376 per ounce. Safe haven demand is fading. Gold is the classic safety trade. When investors get nervous, they buy gold. When they feel confident, they sell it. Crude oil dropped 2.9%, sitting at $80.83 per barrel. This puts pressure on energy names. Oil prices affect everything from transportation costs to consumer spending. Putting it all together, the macro picture today is mixed. There are some cross-currents that could create volatility in the days ahead. Stay alert. All right, let's close with my watch list for tomorrow. These are the 3 things I'm tracking most closely heading into the next session. Number 1, Federal Reserve speakers responding to the soft PPI print and any updated guidance on the September meeting. Number 2, OPEC member production decisions and whether supply cuts follow the demand downgrade. Number 3, United Health and the broader managed care sector for any regulatory or medical cost developments. Write them down. Set your alerts on these levels, and be ready when the opening bell rings. Preparation is the difference between reacting and anticipating. And that is your complete U.S. market wrap for Thursday, August 13th. Today we covered the S&P 500, the NASDAQ, and the Dow Jones. We broke down all 11 sectors, went through the biggest movers both up and down, gave our stock of the day Netflix a full 30-day chart review, check the macro dashboard with VIX, bonds, gold, and oil, and finished with 3 things to watch for tomorrow's session. If you found this valuable, please hit that subscribe button. Turn on the notification bell so you get these episodes every single trading day. Share this with someone who's trying to learn about the markets. Drop a comment below and let me know, are you bullish or bearish heading into tomorrow? I read every single comment and try to respond to as many as I can. Remember, nothing in this video is financial advice. I'm just sharing data, analysis, and my perspective. Always do your own research or consult a licensed financial advisor before making investment decisions. I'll be back tomorrow with another full breakdown. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.